All right, we're back for another Friday financial wrap-up without Mr. Michael Zuber. He is traveling. You see him coming in daily, doing the daily financial news most days, I think pretty much all the days, from a beautiful cruise ship. He's traveling. God bless you, Michael and Olivia. I hope you guys are having a wonderful time. Let's get right into it. This is for March the 7th, 2025. Man, tariffs. What the hell is going on with these tariffs? Let's get into it. We're also going to talk about pending home sales and the 30-year mortgage rates and a frozen housing market. All that and more on this fast. This is going to be a fast Friday financial wrap-up. So let's get into it. This week, it was very interesting. The Atlanta Fed estimated, originally I believe their estimate was that U.S. GDP dropped to 1.5, actually was going to be negative 1.5%. They later adjusted it a few days later to negative 2.8% GDP. What is GDP? The U.S. gross domestic product. What is that? That's the health of the economy. So the big thing people are talking about is, will we see a recession in Q1? Time will tell. Based on everything Michael's reported, based on everything, if you're looking at headline news, it looks as though at least the first quarter is going to be negative. Remember, in order to be in a recession, we need 2 consecutive negative quarters. So time will tell. Are we in the beginning of a recession? Time will tell. Now, I will say this. There's been a lot of chatter, a lot of headlines, a lot of CEOs, retailers, Target, Walmart, all of the different retailers talking about that the tariffs, a lot of fear, a lot of uncertainty about tariffs. What will happen? Will prices increase? Will we see this be inflationary to consumers? Time will tell. We will see. It does take some time for it to play out in the economy. But I can say this, again, basically echoing what Michael's reported. We are seeing a consumer slowdown, and that's very obvious with the negative number for Q1 in terms of GDP. There is a lot of fear and a lot of uncertainty out there in this economy. Time will tell. Now, let's get into the 30-year mortgage, and then also the 30-year mortgage. Let's also talk about the 10-year bond. Let's take a look at that. Now, if we look back over the last, basically from January 1st, 2024 to today, we can see the mortgage rates have been just all over the place. You'll see, if you look at that chart, right, there is a lot of movement. It looked like at one point in the fall of 2024, if you look into September, it looked like we were easily going to be, interest rates this year, 2025, into the 5% range, but that just did not happen. Now, looking at these rates from January 1st, 2025 to today, you'll see that, again, we were bouncing around plus or minus 7%. And then, of course, now as of today, we're closer to about 6.7, 6.8%, depending on where you're looking at, what kind of product. But again, the good thing is that rates are starting to come down. Could that be good news for real estate? Let's talk about it a little bit more. The biggest thing for financial news this week that I think, again, dealing with 30-year mortgage rates is that the 10-year Treasury, basically, if we look at the high, if we go back 90 days, the last 3 months, we were at about 4.8% on the U.S. Treasury on the 10-year. And then now we look at it today as an example here on Friday, it's basically at about 4.23. And the big reason for this, again, if you're looking at financial news, CNBC, a lot of the stock market financial news channels, what they're talking about is a lot of investors are concerned about a potential recession. And what they're doing is they're moving their money from stocks into bonds. Okay, so because a lot of money is moving in volume from the stock market into the bond market, we're seeing, of course, the yield on the bond soften. Pending home sales were down negative for January, the month of January, negative 4.6%. Now, this was the lowest number since 2001. This was the worst report since 2001. Now, a big reason why is, again, the housing market is frozen. Now, there is some good news, and there is, I believe, a silver lining in this. Now, we can all benefit from lower interest rates. And specifically, if you're a realtor, a fix and flip, or a wholesaler, even buying and holding, rates coming down are a good thing. Hopefully, it's going to be enough to unfreeze the market. I think the biggest piece of news for this week is the U.S. Secretary of Treasury, Scott Bessent, U.S. Treasury Secretary. He talked about this week, 2 things he said. He said that the housing market is stuck, but he also believes that it will unfreeze in the next couple of weeks. So what does that really mean? Does he know something that we don't know? My guess is yes. Also, too, as we see these rates come down, hopefully it's enough to unfreeze the market and we start to see some inventory loosen up. It would be nice to see some inventory come back. And I know for a lot of you right now, the biggest issue isn't the interest rates. Interest rates are important. The bigger issue is that there's just not a lot of inventory. There's not a lot for people to look at. There are just, again, the market has been frozen, and it has been frozen for a long time. So time will tell, folks. There is a lot of opportunity out here in this real estate market, whether you're a realtor and buy and hold investor. Hopefully you're all the above, a wholesaler, realtor, fix and flipper. Hopefully you're doing a little bit of everything, and hopefully you're doing it at a high level. I would encourage you to get involved with the One Rental at a Time school community, pennies, lots of good information. I also have my creative financing course. Also, just so much good information and contribution from the community. So with that said, this is your Friday Financial News Wrap Up. Thank you so much for watching. Please like, subscribe, see if I can say it, subscribe and comment. Thank you guys for watching.